Hello everyone, it's Friday, January 9, and today we will analyze the charts for the euro and the British pound to identify potential market trends. Yesterday, both the euro and the pound sterling extended losses against the US dollar. Traders received data on producer price from the euro area, which climbed by 0.5% in November. The Eurozone unemployment rate eased to 6.3% in November from 6.4% a month earlier. Those reports helped keep the market balanced in early trade. Later in the day, however, a string of upbeat US releases waned on the European currencies. Data on the US trade balance showed that the goods and services deficit narrowed sharply to 29.4 USD billion in October from 48.1 USD billion in September 2025, a move market participants framed as evidence that President Donald Trump's trade policy is having a positive impact. Against that backdrop, the greenback posted solid gains. U.S. initial jobless claims came in at 208,000 versus 213,000 expected, while continuing claims also surprised to the downside, which further supported the dollar. Today, the US currency may well extend gains, although much will depend on incoming fundamental data and how the market reacts to it. Today's macroeconomic calendar includes data on industrial production and trade balance from Germany and France, while the euro area will publish retail sales figures. Given that these releases cover November activity, they are unlikely to significantly shift market sentiment or decisively redirect the euro, especially since economists do not expect major surprises. All eyes will be on US non-farm payrolls for December. Payrolls rose by 64,000 in November, while the consensus for December projects as 66,000 gain. A print above forecast would likely extend the dollar's rally by delaying expectations of Federal Reserve rate cut. The U.S. unemployment rate is estimated to have eased to 4.5 in December from 4.6 in November, a noteworthy development given that the jobless rate has been rising since June 2025. A confirmed decline would be read as a positive signal for the Federal Reserve. Traders will also watch the University of Michigan's readings on consumer sentiment, inflation expectations, and current conditions. In addition, Fed officials Neil Kashkari and Thomas Balkin are scheduled to speak today and may well leave some comments on the health of the U.S. labor market. Turning to technical analysis, the 1-hour EUR USD chart suggests that a false breakout at 1.1641 would trigger a buy signal, driving the euro up to 1662. A break in consolidation above this level would open the path towards 1681. In case of weak US data, the euro could extend gains to 1702, where I would look to go short on the rebound, targeting a 15-20 pip intraday move. Short entries at 1662 and 1681 should be considered on the false breakout. If buying interest at 1641 is muted, the euro could dip to 1619, while strong US jobs data could bring the European currency down to 1.1591. At this level, it would be prudent to go long on a rebound, anticipating intraday correction of 25-30 pips. Speaking of the British pound, long positions could be considered around 1.3403. With no major UK releases on today's calendar, a false breakout at this level will push sterling back toward 34.32, opening the way for further upside. A break in consolidation above this mark would justify adding to long positions, with the pound rising to 34.60 and probably extending its bullish run to 34.88. At this level, it would be wise to go short on the rebound, aiming for a 20-25 pip decline. Short entries at 34.60 and 34.32 could be set following a false breakout, targeting 1.3403. If US data comes in stronger than expected and the price falls below 34.03, the British currency could slide to 1.3373 and then extend weakness to 33.41. At this mark, it would make sense to open long positions on a rebound, counting on a 25-30 pip move. Going long at 33.73 and 34.03 would only be relevant in the event of a false breakout. Good luck to everyone. Have a great weekend.